This brings us to the second panels of today on the hottest topic, carbon market opportunity in Asia. So let me invite the next panel moderator, our very own Ben McQuhae, Vice President and Special Advisor to the Chairman of HKGFA and the founder of Ben McQuhae & Co. So please, Ben, the floor is yours.
Thank you, thank you. Thank you. Can I just invite Sammie, Glenda, and Tassos to join me? Right. Okay, I think we're waiting for a nod, or we should start. Okay, let's just start, shall we? Because I can see our panelists from London and across the bay in Guangdong on the screen as well. So thank you all for joining us in the second panel session today, where we're going to be discussing the topic of expanding the role of carbon markets in Asia. My name is Ben McQuhae. We have today a really incredible and global panel of carbon markets experts. So let me just get right on with the introduction straight away. So as I tend to like to do, by order of distance, let me first introduce Chris Leeds from the UK. Chris is the head of carbon markets development with Standard Chartered Bank. Also from the UK, we have Chris Webb, who is the global head of carbon markets at HSBC. Closer to home, we have Meng Meng, who is Secretary General of the Guangdong Green Finance Committee and President of the China Emissions Exchange Guangzhou. Closer still on stage at the far end, welcome Tassos Zavitsanakis. Tassos is the Head of Sustainable Finance for Greater China, APAC Sustainable Finance Office with UBS. Closer still, Glenda So. Welcome, Glenda. Glenda is the co-head of markets at the Hong Kong Exchanges and Clearing Limited, HKCEC, of course. And then right next to me, Sammie Leung, who is partner at ESG Services Asia Pacific region with PwC. And Sammie, you get to sit right next to me in celebration of your green shoes to go with my green socks. Okay. So we have a big panel today and a really important topic, so let me just get straight on with it. I'd like us to start really with some global perspectives, focusing on the voluntary carbon market. I mean, we hear about sort of the market size and market potential all the time now, and the latest at least Bloomberg prediction that I've seen was that the voluntary carbon market can grow to between $240 and $540 billion by 2050. And it feels like we're finally seeing some convergence between climate science and also climate policy, and a surge really of net zero commitments both at the national and corporate levels. At the same time, however, the voluntary carbon market remains highly fragmented, dysfunctional in many cases, and the arguments for and against offsetting remain, largely unsettled. But the one thing that everybody seems to agree on is that integrity and quality are fundamental. And so that's the sort of the topic that I'd like to start with, and I'd like to bring in Chris Leeds, please. If for people that don't know Chris, he was a real driving force behind the task force for scaling the voluntary carbon market, and is now an elected representative on the Integrity Council. So Chris, over to you. Please tell us, why is integrity so important and quality so important?
Good afternoon, everyone. Hopefully you can all hear me clearly. It's always a little bit tricky when you're on these hybrid sessions and just making sure everybody's able to hear what you've got to say and you can be seen easily. But no, thank you very much for having me on the panel, and a great panel to be talking alongside and giving me the opportunity to talk about these key issues, and as you say, integrity and quality being very much the primary drivers. And I think it's because when we need to look at this from two elements as well. But the point about integrity and quality is that we need to know that the actions that we're taking are actually going to have an impact, and that they are going to lead to carbon emissions reductions and avoidance, and of course removals. Okay, we're going to be increasingly talking about removals. I'm sure that's something that the panel will talk about today. But right now there's still an awful lot of reduction to be done before we really start to focus on the removal side. But either way, we've got to ensure that that money that we're all putting in on a voluntary basis, that's the whole point about the market at the moment. It's voluntary action that's being taken by companies, and they want to ensure that the money they're spending goes to good use, goes to the people that should be actually taking the action, and is going to do what we want it to do. And then the stakeholders of those companies and people around the world want to also make sure that the claims that people are making around that are also true and of high integrity, so that we can really see things starting to happen. For too long now, we're sitting in this market, and actually not enough is happening. We're not seeing the emissions reductions that we need. Now, the voluntary market can have a really important, contribution to that. It's one of the tools. We need all the tools in the box, but the voluntary market is one of the tools that can really get money into large-scale projects around the world, in large amounts of capital that can really make a difference straight away. It's something that we can do now, whereas a lot of the things that when we look at reducing carbon emissions, like moving to green hydrogen, green steel, green cement, all of these things that we need to do, even green energy, it's going to take time. But we can do things today to reduce emissions immediately, whether that's avoided deforestation, whether that's switching to renewables, whether that's energy efficiency. But we need to make sure that the money that we're going to put into those projects is actually going to happen.
Correct.
So you mentioned the Integrity Council. The Integrity Council at the moment is currently going through a consultation process. So we are trying to establish a set of core carbon principles that will underpin the quality of carbon credits. Right, so number one, the carbon credits that are actually being circulated really should do what they say they're going to do. So that consultation goes on until the 27th of September. If you haven't responded, please do. There is still time. Every response is important, and we are listening. We are going to make changes to the principles and the assessment framework that was published based on those responses. And then I think the other side of the coin is the actual integrity around demand. What are companies saying they're doing with those carbon credits? What claim are they making? And again, I heard in the last session, we talked about offsetting. Offsetting is important because that is the one use today we have of carbon credits. People buy credits to make a claim. If we don't allow offsetting or some form of it, right now there won't be any demand for carbon credits unless we replace that with legislation, which may be the way to go, but again, that's something I'm sure we can talk about in the sessions this afternoon. But that's why integrity is so important, and that's why quality is so important. Super.
Let me just jump in, if I may. You mentioned the core carbon principles. I was reflecting on the Integrity Council website the other day, and I just want to share this quote with everyone. It says that the Integrity Council's role is to set and enforce, and this is, I think, the key words, a definitive global threshold standard for high-quality carbon credits. So my question to you, Chris, is can the CCP really achieve on this, at a global level and quickly?
Yes, I think it can. I think it all depends on people cooperating. It depends on people making compromises to some extent in terms of the way that they operate, not in terms of the quality, but actually coming together and agreeing that this is what we want to do. The industry has been going for some fair period of time now. The voluntary side of this, at least 20 years really, and really has been getting going over the last 10 to 15 years. And there are lots of different standards out there. There are lots of people doing some really good work to validate and verify emissions reductions projects around the world. But there's a lot of confusion around there. There's a lot of different standards. There's a lot of different ways that we assess those standards, or that those projects and those methodologies assessed. What the Integrity Council is trying to do is bring that all together and to have a single way that we can assess those different standards and those different methodologies, so that we can all understand the quality that they're generating, and that we can actually see how they are compatible across each other.
Sure.
Right? So it's that compatibility and that standardization, I think, that we need to see.
So super. And just finally and quickly, if I may, you yourself on there's a video presentation mentioned the importance of transparent pricing, assurance of quality, and ongoing stakeholder engagement. Would you say are these three equal priorities, or is there an order of priority for these components?
That's an interesting question. I think they do have pretty similar weight. So transparency is so important. We see that in all markets, and you know, sitting in Hong Kong and looking at the way that the Hong Kong markets, financial markets work, you know, we see transparency being so important to ensure that people know, you know, can really be sure that there is integrity in the market, and that everybody can see that people are being treated fairly. So I think transparency is incredibly important. But of course, being able to work together is also important. You know, we need to see that all stakeholders are engaged, whether that's indigenous peoples, local communities, whether that's the standard setters, the developers, the investors, or indeed wider society at large. So it's about bringing organisations together as much as possible and ensuring that they can work together.
Great.
So I think those are the areas that are really important.
Super, thank you. Well, I think working together is a great place just to pause and bring in Chris Webb. Chris, do you tend to agree, and that is with the proposition that sort of international standards are a realistic goal for the voluntary market?
Ben, thanks, and good afternoon, everyone. I hope you can all hear me well. Thanks for inviting me to participate today. It's a great honour to be on the panel. I really hope next time to be able to do that in person. Look, Ben, I'm going to dive into that, but I just wanted to say a couple of things to frame my response that really pick up some themes that Chris also touched on. First, just to be really clear, using carbon credits and offsetting, as Chris really honed in on, is just one tool in the toolbox. That supporting clients to avoid or reduce their greenhouse gas emissions is a top priority for HSBC. We've committed to aligning the financed emissions from our portfolio of customers to net zero by 2050 or sooner. And so that I think context and framing is really important. But we do recognise that for many companies, using high quality carbon credits is a tool, again, one of many, that will enable them to go further, faster in contributing to tackle global climate change, and particularly in the near term. So for us as a bank, ensuring there's a vibrant, high-quality, voluntary carbon market, we think is a critical lever to finance climate action around the world now. So let's talk about standards in that market, and you asked about an international standard or standards. Like, as we've heard, the voluntary carbon market, which by definition is unregulated, look, it doesn't have that universal set of standards. I just want to flag one of the positive sides to that. We'll get on to why that needs to be addressed, but just to acknowledge one of the things that has enabled is the voluntary carbon market has been highly innovative over the past 20 or so years. All sorts of different project types, standards, methodologies, technologies have been developed, deployed, and are constantly being updated and enhanced. For example, you know, a relative newcomer to the carbon market is blue carbon projects that support restoration and protection of coastal ecosystems. That includes now the world's largest mangrove restoration project in Pakistan that sold its first credits just earlier this year. So there's an innovation angle to that fragmentation that I just want to bear in mind. But I think an international standard could be extremely helpful in defining this common approach to what constitutes a high-quality carbon credit. Is it a realistic goal? Well, it's certainly something we should aspire to. Given this is a global market, it can bridge the fragmentation you mentioned earlier, Ben. It can bring the transparency that Chris mentioned, and it help address the confusion also that Chris picked up on. But I think I'd say three things about about that aspiration. First, I think it's going to take time for projects to adapt to any international standard, whether that's the Integrity Council or otherwise. So I think what's important to also recognize is that whilst we're on that journey, many standards, they all need to continue their evolution to further enhance best practice. And this is happening. The VCS, the largest voluntary carbon standard, is currently making some major changes to how projects that, for example, protect standing forests are accounted for. So we need to continue the evolution from the bottom up as we try and draw things together. Secondly, is that I don't expect the innovation I mentioned to stop. I think we're going to see new organizations always looking to do new things in new ways, perhaps creating new methodologies or monitoring approaches or even standards altogether. The Blue Carbon Project in Pakistan that I mentioned is in fact one of the first to use a new methodology from the VCS. So these firsts will continue. So for me, I think of an international standard perhaps as a universal view on what the bar is for high quality, and that others and the market will continue to build on top of and around that. So I think that lands to my third point here, which is that the Integrity Council will also, and this is a core part of its setup, will need to continuously evolve and innovate. Nothing here, I'm afraid, is going to remain static. The market is going to continue to learn and evolve and always strive to do better. So this will remain a dynamic place.
I'm sure, no doubt. You touched on an important point when you mentioned that there's no universal set of standards. So on that basis, we also, or rather, if you take into consideration the absence of universal standards, on the other hand, we see the sort of surge in net zero targets and commitments, etc. What does I guess in the absence of the standards, right now, what do buyers aim for? I mean, how do they know what to aim for? How does a buyer with sort of best intentions to acquire quality offset ensure that is what they do indeed buy?
So Ben, I just want to firstly really reiterate that point around corporates and best intentions. As we've been talking about, quality is key. And I think there are a number of reasons why quality is so important to corporates in this space. First is the broader sustainable development impact. High quality carbon credits often deliver a host of additional benefits to people and planet. So perhaps a peat swamp forest project in Indonesia, yes, it reduces greenhouse gas emissions, but it's promoting sustainable agriculture, livelihoods, clean water, education provision for communities. And actually, these positive impacts enable companies to demonstrate support across a whole range of sustainability targets. And the other is reputational risk. In my experience, as you alluded to there, Ben, I think companies, most companies really want to be associated with doing the right thing in this market. And they know that means high quality voluntary carbon credits. And they know their stakeholders expect this. So, I think your question was really getting at, well, how do they orientate themselves and navigate this space?
Great.
Well, a couple of things. I think it's important to note that each company really needs to understand its risk appetite here. This is going to drive how they approach deciding what types of carbon credits, how to procure them. I think, often within companies, board level commitments on net zero have made carbon offsetting a board level conversation. What was historically something the preserve of perhaps an individual expert within an organization is now something that a whole raft of colleagues across an organization need to understand and be a part of that conversation. So I don't want to underestimate what is often a first step for companies, which is upskilling, ensuring everybody across a company has the ability to engage in the right conversation here, cognizant of the nuances and the details.
Great.
I think the other thing I'll just add is how do they then go about executing and building that? Well, I think there are two models broadly. Some companies choose to build their own capacity, particularly those that are sufficiently large. The others is to partner with those that can help them. So there are a range of different partners, perhaps NGOs, other carbon retailers or consultants. I think I've seen both those models deployed really well. What's been key in both those instances is about finding an organization that shares your values and complements your capabilities.
Super. Chris, I'm going to have to jump in because we have a large panel and lots of comments, but thank you so much for that. Tassos, I mean, some people who are sort of participating and watching this event will see, we have a large panel, 50% of which are banks. And some people might find it a bit curious to see sort of banks sort of deeply involved in the sort of, or deeply interested and involved, of course, in carbon and carbon markets. So tell us, what do you see as the role or the roles of banks in this space?
Thanks, Ben, and thank you very much for having us today here. And this is a great panel to cover all the aspects of voluntary carbon markets and compliance markets. I think it's quite interesting to see how the role of banks has evolved over the last 2 years. I think I see how regulators, investors, and our clients increasingly expect us not only to be able to price financial risk, but we've become climate transition advisors. We need to be able to talk about carbon. We need to talk about carbon abatement technologies. We need to talk about social aspects and just transition. This is all new complementary, new skill sets that we didn't used to have in the past. Now, I also see how UBS approaches the whole carbon market space and where we want to see ourselves as an ambition to become, right? We want to be the place where our clients can come and they can get advice on carbon strategies. We want them to be able to execute and have access in the infrastructure in order to perform settlement. And we also want to prefer to offer to them investment solutions. Now, these are all work in progress. Some of them are exploratory because we do need to understand the risks and opportunities that exist in these markets, both for ourselves as a financial institution, but also for our clients so that we can guide them appropriately. Now, so there's 3 areas, right, where how, as banks, we develop our own capabilities. We first of all need the product. So we'll have the financial product innovation and the risk management. Compliance market is a little bit more developed. I mean, we already offer carbon hedging solutions for our corporate clients that want to play into the European emission trading systems. Voluntary carbon markets, we take a similar approach, but there we need to be a little bit more careful. We need to make sure that the quality items, then the risk that's associated with them, and both Chris actually mentioned, is something as a new capability we need to be thinking voluntary carbon markets. The second one is that we're effectively developing the ecosystem and the infrastructure. We constantly speak with regulators, we speak with governments, we speak with exchanges that they want to build actually their own offerings in this space. And through the work that we do with Carbon Place, we help with actually scaling up and building the infrastructure that will be required over time in order to scale the voluntary carbon marketplace, to bring transparency, scalability, as well as credibility. And lastly, we do capacity building for us, for our employees, for our clients, because you need, when you walk into this market, to understand the risks and the opportunities associated with it. That's why we're also early on as part of the task force for voluntary carbon markets. We've also been providing consultation and feedback to the ISVCM right now, because we think that all these skills above are critical right now. They're complementary to each other. You asked about weightings. It's very difficult. You need to do all the things that I mentioned. You need to be part of the solution as well as part of the problem, because the market is in its infancy and will require to be scaled up, and it needs to be credible.
You mentioned, I mean, a long list of sort of, I suppose, services that the banking sector can provide to their clients. I mean, to the uninitiated like me, it sounds like sort of advisory type of services, or at least a good number of what you've perhaps what you described could be sort of more on the advisory side. But I mean, isn't a primary function of banks in any market to provide capital? And if so, then how or to what extent can the banking sector use carbon as a tool to increase capital flows, to the very projects that we should want to support to support climate change and climate action?
That's a very good question. Look, I mean, I think we need to recognize that the path to net zero has got 2 sides. And for the people that like the technical aspects, right? I mean, we have the decarbonization path at the top. It needs to be going down, and we also have the carbon offsets that effectively over time needs to be reduced. Now, both of these pathways will have a different carbon price and a different abatement potential. And depending on how technology evolves over time, we'll be able to have different pricing points and therefore different solutions that will come, let's say, online for corporates to implement. Now, when I look at carbon removal, I mean, if we look at by 2050, the estimates from IPCC is about 5 to 16 gigatons. And just to put it relative to what we have, on an annual basis, approximately, we produce 50 gigatons every year. So that carbon removal needs to be quite big. It will be a significant part at the end to the net zero. Now, when we look at how much money is being flowing and how much is needed, I mean, the estimates are about 2 trillion on an annual basis that needs to be deployed. Right now, from OECD, the private capital that has been flowing to developing economies is about 14 billion. There's a huge gap. Now, so where does carbon markets come into play, right? And I think there's two ways. I mean, there is the stick and there is the carrot for the two pathways that I explained. I think the stick comes in the decarbonization through carbon pricing. There you can actually increase the carbon price, and you can start having actually corporates implementing, deploying capital towards green capex, and that green capex can help decarbonization and therefore allow them to reduce their emission profile. So that's the stick. Now, the carrot, I think, is where the magic can happen. And the reason why I'm saying that is that that carbon credits can be an accelerator to drive down emerging technologies. And I have a sentence here because I wanted to make sure I get it right? That carbon credits can be a mechanism to deploy precision capital towards very specific, measurable environmental and societal outcomes to deliver impact at scale. If you want to have impact investing, that's for me the definition of how you can get it. So, and I think the way that we walk the talk also in UBS, right, and look at what we're doing, I mean, in terms from our side on long-term commitments and carbon removal, we've already implemented, let's say, to emerging technologies with some of the Swiss companies that are already developing products in recycled concrete and direct air carbon capture and storage. So those commitments, which are long-term, allows to a company in an emerging technology to have a planning security. And that's what we're helping with. And we need to help to scale that because that also sends a very strong signal to the market. Now, these are direct investments, but there's also the listed solutions. And I know also London Stock Exchange is already thinking about listing nature-based carbon fund solutions. So that's another way in order to accelerate even more capital from moving from a private into the public space. And potentially, you also here, we're going to have something similar at some point.
Tassos, just as a final question, if I may, because as always, the clock is ticking. You know, a lot of companies that I speak to, project developers that are looking to generate carbon credits or other forms of offset for their from their projects, you know, they don't feel like they have access to sort of green capital to support their projects. You know, they would see, you know, there's a lot of talk and a lot of sort of big numbers being thrown around, but they're not sort of seeing it at the sort of real sort of SME working level. Is providing sort of facilities and capital solutions to those sort of, I mean, really at the project level, is that something that banks are looking at, and is that something that banks would consider their sort of part of their responsibility in this space?
So I think that's a very good question, right? And I'm thinking also about more broadly because about the roles of the banks. I think the roles of the banks and the handshake that traditionally existed between what the role of the bank is versus the counterparty, whether that counterparty is a corporate or whether it's a project developer that you said, these are changing. So in the past, we would say, I only do M&A, so you come to me, you tell me what you want, I'll give you money, right? You want a bond, I'll give you money. Right now, the things have shifted. I need to also explain to you how you're going to raise a bond, how you're going to also be deploying that money. I need to get comfort that you're going to be using that money from a credible point of view in the right way. Mm-hmm. So we do play a role. We do try within the bank to identify what I call like unlocking value for our clients, where we want to identify and see where can we have land assets, for example. Can I help my client basically create new cash flows through that land assets? And we need to recognize that a lot of clients are looking in terms of how do I switch from an existing business model, which is probably brown by nature, into something that's more green. It's my role to help me protect his value and preserve his value.
Great. I'm going to jump in there and interrupt, but I'm going to sort of condense your response into a yes. Yes. It is. Good. You all heard it. All right. Yes. All right. So switching gears a little bit, I'd like us to focus now closer to home on Hong Kong and mainland China perspectives. We've been talking about carbon in Hong Kong for quite some time now. As I recall, this is the third year in a row where we've had a sort of carbon session or carbon discussion on our annual forum agenda. But I think for a lot of people, they would, quite fairly consider that there's very little, if any, sort of real action or very few signs of real action in this space so far. In the mainland China, for example, this time last year or so, we were very excited the launch of the world's largest ETS, but of course the reality has been sort of very, very low allowance trading volumes. And on the voluntary side in mainland China, we're still waiting for the Ministry of Ecology and Environment to restart the HKCEC program. And whilst we continue to wait, there continues to be uncertainty with regards to the timing, eligibility criteria, or indeed offshore access to CCERs. So with that sort of to set the scene, I'd like now to bring in Meng Meng of the China Emissions Exchange in Guangzhou. Meng Meng, how do we unlock the potential of China's ETS? And can a robust voluntary carbon market help in that process? Meng Meng.
Thank you. Thank you. I think your question was very important. And the Chinese carbon market, ever since its establishment, it has already become the largest carbon market in the world. And this is just including some industries. So I would like to express this view. When it comes to the nationwide carbon markets of China, we should adopt a more open mind and attitude. After all, it has only been in operation for 1 year. We know that in the EU, they have started their operations in year 2003 and 2004. They have started the EU carbon markets way back then. So within 1 year, the Chinese carbon markets have already achieved so much. So I guess we should keep an optimistic view regarding the Chinese market. Perhaps we need more time to further improve it. After all, Chinese carbon emissions is very large in volume, and our industrial landscape is also very complicated. And in China, we are in a different developmental stage compared with other nations, so we are facing a lot of challenges. So that's the first point I would like to raise. And secondly, as you've said, in Hong Kong, we have been talking about the issue of carbon emissions a lot, carbon trading a lot, and it's a focus of many people. But in the end, we have not implemented a lot of results. But I think we have still made concrete breakthroughs and progress. For example, we have been working with the Hong Kong Stock Exchange to research into the possibility of launching very concrete products. And at the same time, under our alliance, we are engaging in in-depth and practical research and fruitful research and developments, because in the Hong Kong, their carbon neutrality targets is different from Chinese carbon neutrality targets. And Hong Kong's developmental path and their journey is not at all comparable in size and quality with Chinese development. Therefore, Chinese carbon markets will have its own features. Okay, after several years of discussions, what role should Hong Kong's carbon emissions trading play in the global landscape? It's already getting clearer and clearer. I think in the future we would see more and more progress. As for mainland China, particularly focusing on Guangdong province for our carbon markets, we also have many different pathways. We have gained a lot of experiences, learned our lessons. I think in the future, in the Greater Bay Area, the integrated Bay Area further integrates, we could create create a lot of meaningful integration and meaningful discussions. Because for Guangdong, for example, we have operated for 10 years. Our total trading volume, if you look at it from a financial perspective, is not that large. The total volume about is just 6 billion renminbi, 6 billion yuan. Of course, this is just one province in China. So I think that this is a complicated issue. And looking ahead, I really hope that in the Greater Bay Area region, we could work with Hong Kong and Macau to join forces into research and develop on how to leverage the international financial center status of Hong Kong and link it up with the large consumer market in mainland China so that our carbon trading markets will have more space and more potential to contribute more. And of course, several guests have mentioned the issue of standards, and I'd like to talk about standards as well. From our perspective, right now out there on the market, when it comes to voluntary carbon emission standards, there are so many different standards there. This is the current status quo. People should not be too afraid of this problem. It is normal as our negotiations globally continue to evolve. The markets would start to naturally adjust with regards to these standards in order to formulate a standard which better suit market needs. So right now, we should have a more accepting and open-minded view to look at the markets, be it the voluntary market or other markets. We should look at these standards, products, and other understanding throughout the world with a more open mind, because this will bring forth a wider landscape, more potential for us to collaborate. I think if we don't have a diverse set of views, it's very difficult for us to discuss this issue. So this is a very good moment in time for us to do more planning and research. Thank you very much.
Just a follow-up question, if I may. We hear a lot about a GBA, a Greater Bay Area carbon market. We also hear in Hong Kong some talk about sort of Hong Kong opting into a GBA ETS. Is that something that you consider to be a realistic or viable option?
We very much look forward to Hong Kong joining the GBA's ETS. We think that this is feasible because Hong Kong does not have its own mandatory ETS mechanism, but Hong Kong has its own carbon neutrality targets. It needs to reduce their carbon emissions as well. So if a city establishes its own ETS, then its operational cost would be high and perhaps its efficiency would not be that great. So since we have the Greater Bay Area region, and in that region we have the very large Guangdong ETS system in place already, so perhaps Hong Kong could consider joining us. That would be more cost efficient for Hong Kong, and this would be very beneficial to them as well. That's my view, of course, and we have conducted a lot of research in this regard from an industry perspective, from the volumes perspective, and what standards and what format will be adapted after we include Hong Kong in. We have conducted various types of research here. In theory, I think this is feasible, but in practice, we would encounter a lot of problems. For example, Hong Kong legislation problems, the industries of Hong Kong and the financial world. In those areas, we might need to seek more common ground. We see a lot of progress made already, and we have set up our select guidance committee as well, guidance work group, and I think there's a lot of willpower here to do that. So I think in the future, if we want to reduce carbon emissions as a low cost, the Greater Bay Area as a market is necessary. And you're not building something new. We can connect the existing systems that Guangdong have with Hong Kong. So in other words, you could use Guangdong's existing ETS as part of Hong Kong's toolkit in reducing carbon emissions. So I think there are a lot of details worth exploring here, but I won't take up too much of your time. If I have the opportunity, I'm more than happy to discuss this further with everyone. Thank you.
Meng Meng, I think it's a really fascinating sort of proposition. To me, it's very exciting. I'm not going to follow up with another question, but I just want to sort of, leave a remark to the group to think about, and that's this: if we support a GBA ETS and Hong Kong's participation in a GBA ETS, then what would the relationship between the GBA ETS and the national ETS be? So something to, if anyone knows the answer, please let me know. In the meantime, we're going to move on, and it's staying sort of close to home in Hong Kong, GBA. Glenda, the Hong Kong Exchange has been, I don't know whether making announcements is the right way to describe it, but there was a video interview that I saw that was posted recently, I think which was about, I think, activity that HKCEC is sort of engaging in or preparing for in the voluntary space, and I think your sort of parting comment was watch this space, and of course we're still watching eagerly and excitedly. Tell us this: what role will the exchange have in the carbon market in Hong Kong, GBA, and potentially internationally? Glenda.
Yeah, thanks, Ben. I like to divide into 4 buckets of area to talk about. So the first is friction. So the role of an exchange typically is to remove friction. And for carbon as well, I think the exchange can play a role to remove friction. So what are the friction that exists? Where do I buy the carbon credits? Do I need to find the brokers to buy those carbon credits? Do I log onto a website? Which one is a credible website I should look at? So I think the exchange play a role to make sure that there is a place to remove that frictions of a very bifurcated market where to buy those carbon credits. So I think the exchange play a role to put everything together, you can say. And then the second thing is what we observe in the market today. I think a lot of the panel speakers already talked about standard, TCFD reporting, etc. So the other thing about the friction is also settlement practice. If I buy a carbon credit, do I have any settlement risk? Do I have any credit risk? So I think that the exchange can also play a big role to make sure that those unnecessary risk, nobody needs to bear those unnecessary risk. And then the other thing is, I think some panelists also talk about transparency as well. So what is the carbon price today? I'm sure a lot of transactions happen on an OTC basis. But what is the price today? Is a place where I can see the transactions, a place that I can see the price of a carbon. Today, I think, unfortunately, a lot of transactions is still happening on an OTC basis. The market is still a bit nascent, right? So I'm not surprised in the evolution of the market. You typically will start with a lot of OTC transaction, peer-to-peer transaction. But I think the exchange will bring transparency to the data that people can access. And the price of carbon will be discovered more easily. Although it's a nascent market, but as many of the panelists already said that the transaction volume have increased, is the market very, very liquid right now? I think the liquidity will still need to improve. So I think if we can bring transparency, removal of all these unnecessary settlement risk data to the marketplace, I think we will be able to make the carbon market a lot more efficient and remove those frictional costs that will hinder the development of the market. So that's the first bucket. The second bucket is network. We announced the Hong Kong International Carbon Market Council sometime in July. And the purpose of the council is actually to bring the network together to create that network effect. We got buyers, we got seller, we got project developer, and we got corporates. We got people that are emitting carbons. We also got corporations that are actually creating projects. So I think it's a network where we can have buyer and seller meet in a network, but also those people, they also all have a stake within the development of carbon. We're bringing that network together to create that network effect. We have, I think, 12 members that we admitted in the council. again, it's a network of people that can all bring together this vibrancy of the carbon market. Not only buyer and seller and corporation, exactly, we also have banks. I think banks also play a big role in the carbon market. I think we already talked about, aside from carbon, we're talking about, in general, how do we bring capital to the right projects, to the ecosystem. So the network is something that I think exchange is also play a role to bring those networks together. And then the third thing that I want to talk about is ecosystem. You got an efficient market, you got a liquid market, you got the network, you also need an ecosystem. I think carbon credit, voluntary carbon credit is just one expression of how you want to finance in the carbon world. I mean, there could be other asset class. A bond, we got a lot of green bonds. We got asset-backed security that could be financing those carbon projects. You could also have derivative as well. So you got derivative issues overseas in some of the US exchanges already. So we need an ecosystem, right? Not just one product, but many products that we can offer to the network to
Could I just ask, you mentioned the Carbon Council that was recently launched. Is that the sort of the network plus ecosystem, or is that a first step to bringing that to Hong Kong? Because I think quite a lot of observers might sort of ask, well, we've got a lot of, or there's a lot of talk about what we're going to do in Hong Kong, Hong Kong's role within Greater China, etc., mainland China, etc. But in a sort of a fully functioning, sort of robust carbon market, there are traders and brokers and accountants and lawyers, of course, you can never have too many of those, the academic regulators and so on and so on. Do we have that infrastructure yet, or is that sort of part of the plan to help sort of, I guess, build that along with the ecosystem?
Yeah, I think that that's, you can say, it's the network, and also they are all a great player. They are all essential player in the ecosystem. I think for HKEX, we actually play a part in the cross-agency steering committee. So I think that the government, right, in general, is part of the ecosystem as well. So we already participated heavily in the cross-agency steering committee. And now I think we need to bring the market together. I think if you look at the composition of the Carbon Market Council, we also have people from Europe, we have banks from Australia. We also have a lot of corporations in Hong Kong, and also large corporations in China as well. To develop any market, I think a network is essential. And the network to complete the ecosystem, I also think that is actually important as well. And I also want to mention about the last point, about the four things I want to talk about. So the last point is, I think, is as an influencer, HKEX as an influencer. Aside from a market operator, aside from creating a marketplace for people to buy and sell, HKEX is also a regulator and also a corporate as well. So as a corporate, I mean, sometimes it's lead by example. So I think we want to lead by example. We joined GFANZ. And as a regulator, we have 2,500 listed company over in our exchange. I mean, sometimes actions start with realization, knowing what is your carbon footprint. Whether you reduce it or whether you offset it, it starts with realization. So a lot of the work that we are doing on the disclosure with the listing department and also ISSB, TCFD, I think people need to realize what is their carbon footprint. And once they realize, and then they need to do something, that creates the urgency for company to do something on that. So not only that, I think if you look at Stage, we actually launched Stage, I think around 2 years ago now. Stage is an information platform, but Stage is also an education platform. So I think a lot of the actions I think start with these kind of behavior. Realization, I need to take actions, I need to be educated to know what expression you want to do in order to eliminate or offset your carbon footprint.
Thank you. I have one final question, and I hate to do this to you, but if possible, can you give me the sort of the one minute answer to a relatively complicated question? So excuse me for even asking. But you shared with us the sort of the four I don't know, pillars perhaps of the exchange's sort of approach or vision to the to supporting the carbon market. I mean, what we all want to know really is what does the exchange consider its sort of role or perhaps opportunity in supporting the voluntary market in mainland and also the ETS in the mainland?
I feel that the opportunity is very big. However, the fact is today there is no ETS market in Hong Kong. But what I know is the objective for Hong Kong and China and the world is the same. We're all looking at 2030, we're all looking at 2050 or 2060. By helping to promote that liquidity, by helping to create that transparency and discover the price of carbon, I think will help to transit China and Hong Kong into the 2030, 2050 world.
Price benchmark, price discovery, great, thank you. Glenda, thank you so much. Sammie, so we've got a tour around the world and Hong Kong, and here we are. We've heard a lot about, and we hear a lot about sort of demand, you know, the sort of the hundreds of billions of dollars and reflections on the potential size of the voluntary carbon market being in the hundreds of billions of dollars in the years to come. We hear about the corporate demand for offsetting and the net zero targets and commitments, etc. So the list goes on. What we don't really hear that much about is supply. I mean, is there enough supply to meet the anticipated surge in demand, not just for offset, but the quality and high integrity offset that we all want to see and to deal in? Sammie.
Right, thank you for the question, and thank you for having us having this very timely dialogues, given that we've seen what Salesforce have launched with all this exciting carbon market trading happening around the world. So everyone is extremely keen to participate in the dialogues. So on the supply question, so short answer, I believe so, but it probably need a lot of hard work from a lot of parties work together to provide a quality, high quality integrity carbon credits that you mentioned. If we think about what actually makes of carbon credits, there are forestry, there are coastal, there are different project types, and they exist. You know, we're not running out of those supplies, but it needs a lot of hard work, the methodologies enhancements, a lot of people working with the project owners to go through a couple of steps, getting the additionality test done, getting the registry, getting it verified, and then finally find a platform to sell it, and then a couple of years later, if you're lucky, then you will get your credits returned. So it takes quite some time. So what I'm articulating is it makes the life of the project owner actually, if in the meantime they manage to source other alternative capital, they may not go for that route. So that may impact how much supply and how timely we will get this supply. But having said that, I stay very positive in the sense that there are forestry around. In Hong Kong, we are close to a lot of the Southeast Asia supply. We see Vietnam is doing great in the supply, and we are close to, I think in Asia, the second and the third largest supply. We are close to India and mainland China, so there are sufficient supply. But at this stage, I think we need to work extremely hard to bridge the knowledge gap, to do all the harmonization and the enhancement that the other speakers spoke about, and then we could deliver the quality supply that as the market expects us to.
You mentioned some of the challenges for project owners of getting projects verified. I think Chris Webb mentioned earlier about some of the good innovative work that I think VCS are implementing to try and speed up that sort of project verification process. I think we're all sort of probably quite familiar with the practical challenges. You know, it just takes ages to open an account with an established registry now. It takes ages for project owners to get their projects verified in the first place. It takes even longer for project owners that need to develop new sort of methodologies. Are you seeing, and have you seen, and can you share any sort of solutions or interesting, innovative solutions to some of these challenges, or are we still kind of staring up from the bottom of the well?
I have a lot of respect to the existing market practitioners. I think all the carbon VVB community, the independent verification parties, they have been doing what they could. But I think in short, the talent shortage and also have a rethink of the methodologies and how we put together all the registry and the distribution and all that needs a rethink. But going back to the verification part, some of the steps may actually need to beef up, and some of the steps we probably could streamline it. So that needs a longer conversation that we may not have today. But if we actually have enough knowledge around the topic, the carbon credit is a product that everybody believes is a commodity that the price keep going up. But at the moment, to define that as a credible or quality credit, it requires so much projection, which needs a lot of science knowledge. So think about the soil condition, the tree species. There are a lot of nuances that we probably could standardize in a certain way. And then we have a harmonized way, not identical, but easier to be understood way, so that the market could believe it, and that will drive up the demand and also the supply, and possibly the price as well, as the way I see that. So, but what the Integrity Council proposed, in terms of the program oversighting the third-party verifications, that would be helpful. And I think what they're proposing is pretty mild. For me, from PwC as a trust provider, that if we really engage the dialogue with the investor and the banks, they probably would need a little bit of help in getting a quicker comfort that whether that carbon credit is credible. Whereas as of today, maybe there are like thousands of pages in project documents, and regular people don't really have the science-backed knowledge to really understand that. So that would be the hard work that I described earlier, that we could accelerate the market development.
Yeah. There's hard work for all of us, and there's no doubt about that. With half an eye, at least on the clock down there, I want to sort of close our session just by sort of collecting, really sort of one thought from each of our panelists, and if we can try and do it sort of in sort of seconds rather than minutes, that would be great. Tell us, the one thing that you believe that we can expect to see achieved, and by which I mean actually rolled out and actually delivered in the market in the next 12 months as a sign of real progress in the carbon markets development in Asia. And let's start with Meng Meng, please.
Thank you. I think if there's such a thing that I am really expecting to achieve or deliver in the next 6 months or 12 months, I think it should be the climate negotiation at the end of the year, which I believe will be very helpful for us to build up a carbon market in not only mainland China, but also, in the region, particularly in terms of the standard integration between different areas.
Thank you, Meng Meng. Let's ask, we're doing sort of reverse, not quite reverse order, sorry, Glenda.
I think that in the next 12 months, if we see activity, right? I think actions speak louder than words. If we see activity start happening in Hong Kong or a GBA area, or you see standard, right? So I think you see.
Sorry, I'm sorry to cross-examine you, but when you say activity, can we be specific?
Like say more like really people trading, right,
okay.
in the market, right? A lot of people start engaging in the activity, or we see standard, right, improvement in standard, or I guess a lot of people are looking at ISVCM, right? So I think that standard leap forward, right? People have more confidence about the carbon market.
Thank you, Sammie.
I think I would focus on what I could control. My wish list would be having sufficient talent with the right amounts of knowledge. I hope that Hong Kong would be part of the up and running operating VCM market. I hope we are one of them, but if not, then the Hong Kong talents could be probably participating in this global trade market virtually or in some more innovative way.
Thank you. Chris Leeds.
Thanks, Ben. So my hope would be to see the development of an international standard in this region that really does refer to and use the principles that are being put together by the Integrity Council. So that way we can then start to see a market develop not just across the Hong Kong and Greater Bay Area and China, but across the whole of the Asian region and ultimately globally. So I think we want to see that fungibility develop so that we can see a carbon market really develop from the bottom up, because that's, I think, the way that we're going to see the market develop in the next 12 months, and that would be really exciting.
Great, thank you. Chris Webb.
Thanks, Ben. So one thing from me, for all the reasons Glenda outlined, I think we're really excited by the work the Hong Kong Stock Exchange, but in fact many others across Asia are doing on creating new exchanges and trading platforms to help the market. I think it'd be great to see a number of those launched, but if I think about a key closing comment on the last panel, I think collaboration across those is something that I would really like to see.
Thank you so much. And last but definitely by no means least, Tassos.
My wish will be something that bankers typically don't ask for, and that's regulation. And what I mean by that is I would like to see more regulatory guidance on how carbon credits can actually be part of the transition plan and how they can be integrated. And hopefully, Ashley made the point previously, regulators don't regulate voluntary things. So we probably can drop the word voluntary and we can just call it verified carbon markets.
Thank you. Thank you so much. So we are out of time, and the virtual bailiffs are about to move us out. So I'm not sure quite how to try and sum up. So give me a chance. I think we're all expecting a meaningful sort of 12 months ahead. We're looking at sort of collaboration. We're looking at sort of trading activity, standards, sort of settled standards. We're looking at, of course, talent development. We're looking at interoperability, and we're looking at smart regulation. I think we'd all agree that this is a sort of a bottom-up construction effort that we all need to be part of. And perhaps the final takeaway, which is to reflect on the point where we started, and that is never compromise quality. Okay? Hong Kong Green Finance Association, we never compromise quality, which is why we have such a fantastic panel. So let me thank Tassos, Glenda, Sammie, Chris Webb, Meng Meng, and Chris Leeds. Thank you ever so much for being with us today. Thank you.